Hey there, I'm Lisa Doyle with Sereno Real Estate here in the East Bay. So welcome to our weekly market update. You know, it's just crazy. I get questions every day about this wacky market that we're experiencing. What's going on? What are prices doing? And, you know, where are we headed and what's happening? So I want to give you some data on right now. Here we are, first week of February, and the market continues to be very, very heated. Very low supply of inventory in our area. Inventory remains very low, and demand is remaining just unprecedented. I keep saying the same thing. This is just like nothing I've ever seen before in my 35 years on how much demand we have. So let me jump right into some numbers. So in our East Bay, I always like to give people a kind of a sense of what area that we typically track the data. So the East Bay is anywhere from Livermore all the way down to 580, all the way through the 680, into the Highway 24, that La Miranda area, all the way through Walnut Creek, Martinez, Concord, all the way to Clayton. Kind of that's the whole East Bay. And we work the East County data as well, which is Antioch, Pittsburgh, Brentwood, Oakley, that area. But this data, it doesn't include that. It just includes that 580, 680 corridor down to Clayton. So right now, active inventory, 345, which again is about 60% less than what we normally see. Or even more than that. I mean, generally speaking, this time of year, as we head into the beginning of a year, we might see, even 800, 900, 1,000 houses for sale. So 345, very low. Right now, there's 567 pending in that general area, which if you guys remember, back at the very bottom of the market back in 2011, there was probably about 2,500 active listings at any given time. So again, we are unprecedented numbers right now with inventory being so low. And right now, last week there were 24 houses that were pending over 3 million. Right now there's only 17. So we're seeing a little less of that high-end movement, a little bit more of that middle 2 million plus, 1.5 plus movement. And just to give you some data in a couple of our cities. So right now in San Ramon, the hot spots in our East Bay are Dublin, San Ramon, Blackhawk, Alamo, kind of in the basic 680 corridor really, but everywhere is extraordinarily active. San Ramon right now, there's only 17 active homes, which is just unheard of, 55 that are pending. Danville, there are 29 active, also 55 pending. And, Pleasanton is probably the most, one of the low inventory areas. So there's only 7 houses active and 49 pending. And then Blackhawk again, super low inventory, only 4 active and 6 pending. So what does this mean? Seasonally, we are starting to see more talk of houses coming. I think over this next 30, 60, 90 days, you're going to see inventory increase, but nothing that will likely absorb the demand. We are likely to see demand continuing to be super hot. Interest rates are poised to go up next month, and we're likely to see 2 to 3 adjustments this year is what the Federal Reserve has talked about. So you'll probably see an adjustment in March. They're talking about maybe June, a gradual increase in interest rates. I do not think it will be a significant increase. We're likely to see it gradual, but we'll I'll be keeping you guys posted on that. I think we're due to see our first increase, official increase on maybe March 1st. So I'll keep you guys posted. And then one other thing I wanted to share, something that I learned yesterday. So I don't know if you've ever heard of what's called an opportunity zone. Back in 2017, I think was when opportunity zones were put in place. And it's a super cool project at the time, and it was bipartisan, which I love that. There were people on both sides of the aisle got together and decided what could they do to make the country better in the inner cities where real estate is in tough condition. Living conditions are not what you would hope that they would be. So they brought in what's called opportunity zones. And what that means is it's places across the country where investors will get some tax benefits if they go into these areas and invest in improving the housing in those markets. And so there's actually opportunity zone funds that people can invest in. So the reason I'm bringing this up is I've had clients, probably 10 people over the last week or two, say, I'm hesitant to sell my home and move on because I don't want to have to pay the capital gains. Excuse me. So what I just learned is these opportunity zone funds actually allow people to take what you would normally pay as your property, as your capital gain, invest them in these opportunity zones, basically defer your gain. Let's say you had to pay $100,000 worth of capital gain. Rather than paying it into tax, you could pay it into these opportunity zones, defer the tax, and this would be an investment that you could grow over time. There is one caveat. In 2026, the tax would become due. So I've just learned this from my CPA. Of course, if you have taxes, I'm not a CPA, but I wanted to give you guys the basics of this potential tax benefit. But if you keep this opportunity zone for 10 years or longer, what they've said is that any gain that you get to participate in between now and then would be completely tax deferred after 10 years. So just want you guys to keep that in mind, that there are ways that you can look at a capital gain significant tax on the sale of your primary residence, or on the sale of, you could actually take investment stock funds, anything that you're getting that you're going to be looking at a gain to pay, and look at the opportunity zone as a way to defer the gain and maybe look at something that could grow over time. And then ultimately, if you stay in it for 10 years or longer, you can defer all of the gain that you experienced during that window of time. So it could be something to look at. If you're struggling with the decision to make a move, don't want to sell my house I've owned for 30 years because what about all those capital gains I'm going to have to pay? This is an option. So you guys let me know if you have any questions. I would say real estate moving forward this year appears that things will remain very active. Here in our East Bay, we get a lot of buyers coming from the South Bay. All those tech companies are just growing like crazy. And the employees are coming here. You could live a little farther from where you work now and not have to commute into work every day for most of the companies. So we're just seeing tremendous demand. If you have questions at all about your specific